So let's hit the nail on the head. What exactly does a central bank do? Now, a central bank is just essentially an entity that handles the nation's money supply, and it can loan money to the government with interest. So in the US and other most countries, this is essentially what the process is like. When taxes for the government are not enough to cover expenses, the government will ask the Treasury Department for more money. The Treasury will then receive an IOU, or a bond, from the government. The Treasury, through the banks, hands over the IOU to the Federal Reserve, i.e. the central bank. The central bank then cuts a check for the IOU and hands it to the banks. This exchange is how money is created and can be used to pay the government's bills. So you may be thinking, where does the Federal Reserve get the money to cut its check? Now guys, here's the crazy part. They get a check from nowhere, because they literally just pulled it out of thin air. So when you and I, us normal people, write a check, there must be sufficient funds in our account, or if we were to pay for something on our card, there's got to be sufficient funds in our account to cover the transaction. But when the Federal Reserve, i.e. the central bank, writes one, there is no bank deposit where the check is drawn. So when the Federal Reserve writes a check, it is just essentially creating money out of thin air. So basically, in essence, they are creating money from an account that has no money in it. The money that the Federal Reserve creates can be used as legal tender to buy things, and eventually worms its way into the real economy. On the flip side, if a normal person was to do that, they would go to jail for fraud. But ironically, the Federal Reserve can do it because they invented the system, and this is the same system that we are using in the world today. Now, another part of the system is using commercial banking side. So every time you take out a loan to get a car loan, to get a house, to get general appliances, for example, banks create this money out of nowhere to give you it, and you still have to pay interest on it. Now, Graham Towers, who is the former governor of the Central Bank of Canada, stated that each and every time a bank makes a loan, new bank credit is credited. Paul Tucker, the deputy governor of the Bank of England, said banks extend credit by increasing the borrowing customer's current account. So essentially what they're saying is that each time someone takes out a loan, the bank doesn't use someone else's deposited money and they give it to you. This is a misconception. What the bank does is just creates money. So in this day, all that is typing in characters and digits into a computer. Now 90% of money these days is created digitally, and only 3% is physically available to the public. Now, another crazy thing is that central banks can do is lend 10 times more money than they have in the reserves. So who wrote this system in place? Again, it goes back to the Federal Reserve Act of 1913, and it's the same system used throughout the world. Now, the question you might be thinking is, why should I care? Why should you care? Why are you telling me this? Now, there are obviously consequences. When more loans are given out, more money is created, and the more money that is already in circulation is now worth less and less as the years go on. Now, this is known as inflation. This is basically a tax that we all pay for the fraud of on-demand money printing. It becomes easy money now in exchange for tax on future generations. But this was okay until about 2008. But now wages are not increasing with the rate of inflation. Why this stopped happening is another story for another time, for another video, but I will say is that debt and money are not what you think they are. The more we look into it, the stranger things become. So remember how we talked about how central and commercial banks can create money out of nothing? Well, I sort of lied. It does actually create something. It creates something what we call debt. So when you take out a loan, it is written down as an asset in the bank in a negative form, kind of like a negative value of money, otherwise known as debt. Now, a good example of this is, if you ever seen Fantastic Beasts and Where to Find Them, is when the character Jacob goes to the bank to get a loan to open his bakery, but is denied because he has no collateral to give the bank in return for their money. You can apply this circumstance to what happens at a bank when you go and take out a loan. So okay, back to reality and back to the point. Under the system, debt is still money. Marina Eccles, the governor of Federal Reserves, said, if there were no debts in our money system, there wouldn't be any money. So instead of gold being the backbone of our economy, it's debt. This system that we are under now is sometimes referred to as the debt-based monetary system, and it requires that debt always grows. So countries and people must become deeper into debt so that there is more money in the system, because remember, debt is money. Now, if people and governments stopped borrowing money and started to pay back their loans, then debt won't grow, the money supply shrinks and the system fails. It truly is a weird system, but we live in this system every single day. So how do the central banks control our money? The Federal Reserve and other central banks control our money by adjusting its supply and how much it costs to borrow money. You might know this as the interest rate. With these tools and taking advantage of human group psychology, central banks can create booms and busts of economies at will, derailing economies by messing with it. Now, let's take another case example. In the year 2000, the governor of the Federal Reserve cut interest rates down to 1%. He did this by trying to fight off a recession from the dot-com bubble and encourage people to borrow money. But when interest rates are low and when you borrow money, you will pay a lot less back in interest on your loans or mortgages. So a 1% interest rate hadn't been seen since the 1950s. It seemed like a good idea. The whole thing was to create a wealth effect. People will start to borrow money and buy houses. This would fuel it back into the economy and help stimulate it. This was good while it lasted. However, people ended up borrowing way too much, and as a result was the 2008 housing crash. This is a prime example of what can happen when central banks mess with the economy. Yes, to an extent, corrupt bankers were responsible for the crisis, but the Federal Reserve had a much larger and longer impact that not a lot of people know about. Crazy stuff like Japan's central banks being the top buyer of Japanese stocks in 2016 so that they can have part ownership of companies with money that they've created with nothing. So in essence, it's the central banks that control our economy, and the central and commercial banking system together control all our money. The difference is that the central banks can create money whenever they please, while commercial banks need loans to create their money. Now, to give you an idea of the public's opinion of central banking when people knew what central banking was, here's a few examples. In 1881, the President of the United States, James Garfield, says, "Whoever controls the volume of money in any country is the absolute master of all industry and commerce. When you realize that the entire system is as easily controlled, one way or the other, by a few powerful men at the top, you will not be told of how periods of inflation and depression originate." Ben Franklin once said, "The prime reason of the American War of Independence was a battle of who actually controlled and issued the money of new colonies." Milton Friedman also said, "The Federal Reserve definitely caused the Depression by constricting the amount of currency in circulation by 1/3 from the years 1929 to 1933. Now, with all this being said, so many people argue that central banks are not inherently a bad thing, and they're not inherently a bad thing. Some people argue that they need to be part of the government and they can't be privately owned. Now, some people believe that the government should be able to issue its own money for the benefit of the people it serves and shouldn't have to pay substantial interest on its own debt. This was once tried by Abraham Lincoln, the United States President. The government should create and issue and circulate all of the currency and credits needed to satisfy the spending power of the government and the buying power of the consumers. By the adoption of these principles, the taxpayers will save immense sums of interest. Money will cease to be the master and become the servant of humanity. Now, Abraham Lincoln stated that. Now, again, we have no further comment on that. Now, there's a lot more we could cover in terms of what revolutions and wars, central banking, central decisions have caused, but all in all, revolutions and wars, when you sit through all the fine print and the jargon, it all comes down to money. But it's not all doom and gloom, guys. A small group of people are moving away from the central banking system and moving into other currencies such as cryptocurrencies, but that's a story for another day. So anyways, if you made it to the end, congratulations. You are one of the few that actually know the hidden truths of the universe about how you control our money and where it comes from. It is rare to meet people day to day that know about the system, but it doesn't change the fact that we are living in this system day by day. Now guys, like we always say, we are not saying central banks are inherently bad. They're not a bad thing. At the end of the day, economies do work in central banks, but what all we're doing is shedding light on new information so you guys can use this information to apply to your lives. Now in the upcoming videos, what we're going to be showing you is how to exactly apply these principles into your life. Now we've given you the knowledge, but what is one of our main quotes on the channel? Knowledge is nothing until it is applied. So in the next upcoming videos, what we're going to be showing you is how to apply the knowledge that you've learned in this video to your financial lives.